So the next shift in a trend pattern that we'll talk about is a breakout. So a breakout occurs when the price of an asset moves above an area of resistance or below a support area. Here we see an instance of where price breaks above resistance and an instance where price breaks below support. Now this can be considered significant because price breaking past identified levels of support and resistance shows a sign of strength in that given direction. Breakouts to the upside may indicate that there's further growth or further upside. Buying pressure is really high, or buying volume is stronger because we broke past this level of resistance. Let's say Bitcoin's trading between 40,000 and 44,000. If we break past that 43, 44,000 and close above it, that shows that there was a significant strength in buying activity in the overall market trend. Breakouts to the downside may indicate further price drops. If Bitcoin is trading between that $40,000 to $44,000 range and falls below 40,000 and closes below it, that could indicate selling pressure is increasing and that there may be further price drops. So that's something to keep in mind. Now, it's important to gauge the strength of the breakout and the resulting trend by viewing the asset's trading volume leading up to the breakout, during the breakout, and after the breakout. Volume will often tell us a lot of what's going on in the market. Breakouts with higher volume indicate that investors are interested in buying or selling, whereas the price may continue to climb in the breakout's general direction. This is countered by breakouts paired with low volume. These indicate that investor interest may not match the price action of the asset, signaling that the price is generally less likely to continue in that direction. We really want to see increased volume if we're going to break past a certain level of support or a certain level of resistance. So to make this easier to visualize, here's an example. This is Solana US dollar on the 2-hour chart. Here we see clear indication of Solana trading between about $163 and $153. 163 acts as our resistance level and 153 acts as our support level. And Solana very frequently was bouncing in between these two levels, right? We see that it did come above it. It was coming from a higher region, fell below it. It did overcome it and break past a little bit, but generally, in terms of price action, it did not close in a meaningful way on this particular day. We see price continue to fall and would actually fall below the support level. And this was countered by a somewhat of an increase in volume, but generally, we do see that by these red bars at the bottom, these are volume indicators, by the way, and the higher the volume indicator is, the increased level of volume of money transacted during this candle was or is. And they're also color coded. If it's green, it indicates that buying volume overseed or overcame selling volume, which would result in an increase in prices, right? Because if more people are buying than there are selling, the price would naturally go up. We do see the reverse, where if the red candle increases and is significantly higher, that's a sign that selling pressure was higher than buying pressure, right? There was more people selling than buying. We do see that correlated, especially here and these other instances where the red bars were higher than the green volume bars. And we see that price made these severe drops at the same time, right? Price did fall down to here, to this level, and ultimately we do see these green volume candles really spiked up, indicating that people were buying this dip. There was a lot of price action, a lot of volume and activity buying this dip around this range, around this $140 to $144 range. Price came back up to this previous support level. Now it's acting as resistance and was rejected. Ultimately, price formed a higher low, right? Price formed a higher low compared to this low. So this is where we start to see this shift into an uptrend. Price made another attempt, arguably maybe a little bit higher or about the same, volume generally lower, right, in regards to where it was, and in this push towards the push past this support level, was rejected again. Buying volume increased as price was falling. People were buying this dip, and we do see an establishment of yet another higher low. And the buying volume, buying pressure, ultimately would push this price past this level of resistance of the previous support, and then directly to the next level of resistance, which would have been about 163. And we do see this once again occurring later on around the 20th, the 21st, and the 22nd. These large spikes in volume and general increases in volume, we could see but just by the general arc of the volume bars, was increased and met with price action as it met this level of resistance and would overall break out past it and establish it as support before continuing on to reach newer highs. The next trend shift that we'll talk about is periods of consolidation. So a period of consolidation refers to when an asset's price moves between a defined ranges or a defined range of price in a pattern. This is generally seen as a sign of market indecisiveness or uncertainty, where an uptrend or downtrend is not quite yet established. There's no clear direction to the market. The market's just staying within a range for the time being. Here we see the upper part of the consolidation period is called a line or a level of resistance, whereas the lower range is considered a level of support. So if price is just bouncing back and forth, not really producing higher highs or lower lows, it's just moving back and forth between a range, we can consider that range to be a period of consolidation. It's moving up to that level of resistance and falling back down to that level of support. Now, many traders will work to identify when an asset is consolidating, as it could represent a range that could be traded within. It's somewhat clearly defined. It's been staying in this range. The question becomes, how much longer is it going to stay in that range? Traders may opt to buy or long when the price action reaches the support range as it comes back down to that level, and then sell or short when price nears the resistance, right? We want to buy when it's low, sell when it's high. Now, consolidation periods, this is a note, consolidation periods do not last forever. It's important to track many factors and utilize a multi-time frame analysis during these periods to identify any signs of a breakout in any direction. Price can remain in these ranges for a period of time. Here's an example. This is Ethereum to the US dollar on the 1 hour chart from about early October 2021, and really throughout the majority, for about 14 days, Ethereum stayed in this range between 3,300 and 3,600. And there were several instances to buy this bottom, sell the top. Buy the bottom, sell the top, buy the bottom, sell the top. There were at least three. You can even argue there were more, depending on where your levels of resistance and support were identified to. But yeah, we saw these instances of Ethereum generally just consolidating, staying in this tight range, very little price movement in terms of volatility, just generally staying in this range. And when it did reach these levels of support, these were good opportunities to either buy the dip or enter the market. When it reached these levels of resistance, these could have provided good levels to short or sell the market. Now, generally, since we're looking at the 1 hour chart, in this situation, I would turn to the daily chart, right? Because we don't necessarily want to trade against the greater trend. We don't want to trade against the daily or the weekly, these higher time frame trends, these higher time frame structures. So if I'm trading off of the 1 hour, I'm going to look at the daily, and in this situation, Ethereum was still in an overall uptrend. Ethereum was producing higher highs and higher lows. I would personally have avoided shorting at these levels of resistance and would have opted to more buying the dips because the general trend was upwards. Now, if it was the other way around, if price was coming down and fell in this range, if we're in a clear higher time frame downtrend, I would opt towards shorting the market or selling the tops rather than buying the dips. Finally, let's talk about some downsides of price action analysis. It can be subjective. Technical analysis generally is subjective. It varies from person to person, trader to trader. One person might see a downtrend, whereas another might see the price action indicates a potential reversal, and it also depends on the time frame they're looking for and what methods of charting, indicators that they're using. There can be a lot of variance. Can depend on a number of factors, such as the time frame they're looking at, volume figures, support and resistance levels, indicators, and more. And it really depends on what each person is looking at and what's being incorporated to shape the view on the market. Price action analysis does not factor in current events, news reports, changes in market sentiment, or changes in the company or project structure of the coin. One thing to consider is that there's a saying in trading, particularly by technical traders, that the market will always price in news, right? It's priced in. That's something that you may hear. So, as a reaction to real world news or real world changes outside of the market itself, the market generally, it could be thought of that the market will react to the news as it's happening. And typically we'll see that. To say that it does not inherently factor in current events, I mean, it's not going to take in a newspaper and then all of a sudden change, but there is weight to the idea that the market will immediately shift based on current events without needing that information to be directly inserted into market analysis. It's also important to remember that any prediction made solely using price action on any time frame will be speculative. The more tools and information you can apply to your trading predictions, the better off you'll be and the more accurate you'll be. And also that historical examples of price action is not always a guarantee of future price movement. Risk is always taken on and must be managed to maintain the best results.